Ivanhoe Atlantic, a little-known American company, is making waves in Washington, D.C. with its ambitious plan to tap into Guinea's vast iron ore reserves. The project isn't just about mining, it's about building a major rail corridor to export the ore, promising economic growth for West Africa and a new supply chain for the US and its allies. Ivanhoe Atlantic positions itself as a strategic alternative to supply lines dominated by global powers, aiming to link Guinea's minerals to Liberia's ports for Western benefit. But controversy has erupted over allegations of the company's ties to Chinese-linked entities, drawing scrutiny from US lawmakers and the State Department. The debate now centers on whether an American company with alleged indirect Chinese connections can truly secure America's strategic interests. At stake, national security, corporate ownership, and the high-stakes race for control of critical resources. The answer is tangled in complex corporate structures and the intensifying US-China rivalry over the world's raw materials. The Ivanhoe Atlantic controversy exploded into public view when Representative John Moolenaar, chair of the House Select Committee on China, sent a formal letter to the Secretary of State. Moolenaar's letter accused Ivanhoe Atlantic of having troubling ties to the Chinese Communist Party, framing the company as a sister to Ivanhoe Mines, a Canadian firm with major Chinese state-owned shareholders. He questioned why the US government would support a company with such connections, especially in strategically vital West Africa. The letter challenged the State Department's support for Ivanhoe Atlantic's multi-billion-dollar project, demanding a re-evaluation in light of national security concerns. Moolenaar's move signaled Washington's heightened sensitivity to Chinese influence in global supply chains. He's not just questioning one deal, but the broader US approach to commercial diplomacy and due diligence. By going public, Moolenaar forced Ivanhoe Atlantic, the State Department, and the business community to confront the murky realities of global corporate ownership. The issue is now set for debate at the highest levels. The question, can the US trust its own companies when global influence is so hard to untangle? The answer will shape future policy. The stakes are high for all involved. To understand the uproar, we need to examine the relationship between Ivanhoe Atlantic and Ivanhoe Mines. Officially, they're separate. Ivanhoe Atlantic is US-based, focused on Guinea's iron ore. Ivanhoe Mines is Canadian, mining other minerals elsewhere in Africa. Ivanhoe Atlantic insists there's no direct ownership or control between the two. But critics point to overlapping leadership and origins, arguing that shared personnel create a sister company dynamic, regardless of legal structure. The real debate, does legal separation guarantee independence, or do personal ties and shared leadership bind the companies together? For skeptics, the influence of Ivanhoe Mines' shareholders is impossible to ignore. This web of relationships makes tracking foreign influence in global business a daunting challenge. At the center of the controversy is billionaire Robert Friedland, founder and executive co-chairman of Ivanhoe Mines and chairman of iPulse Incomes, the majority owner of Ivanhoe Atlantic. Friedland's dual leadership links the two companies, fueling suspicions that his business relationships, especially with Chinese partners, could influence both ventures. Critics argue it's unrealistic to believe Friedland's network doesn't cross company lines, especially when state-owned Chinese enterprises are involved. While leveraging relationships is common in business, Friedland's ties to Chinese state entities are now a liability. The fact that he leads both companies, one with significant Chinese state ownership, creates a perception of entanglement. Representative Moolenaar argues that influence flows through people, not just ownership charts. This is the crux of the debate. Can Friedland's companies truly operate independently? The answer could determine Ivanhoe Atlantic's future as a US strategic partner. The Chinese influence concerns focus on two giants, CITIC Group and Zijin Mining, which together own nearly a third of Ivanhoe Mines. Both are state-owned, answerable to Beijing, and their involvement alarms US officials. CITIC's telecom arm is on the FCC's National Security Risk List, while Zijin Mining is on the Uyghur Forced Labor Prevention Act entity list for alleged human rights abuses. These designations make any association with them highly problematic for US partners. For critics, CITIC and Zijin's stake in Ivanhoe Mines is damning evidence of Chinese influence in Friedland's business empire. They argue it's inconceivable for the US to support a venture led by someone so closely tied to entities flagged as security and human rights risks. The presence of these shareholders is seen as a smoking gun against Ivanhoe Atlantic's claims of independence. The controversy is now a test of how the US handles foreign influence in critical industries. The State Department now finds itself in a bind. In July 2025, the US Embassy in Liberia publicly backed Ivanhoe Atlantic's $1.8 billion Liberty Corridor project, touting it as a Western alternative to Chinese infrastructure in Africa. The project promised economic growth for Guinea and Liberia, and a secure mineral supply chain for the US and its allies. But Moolenaar's letter has thrown this support into question, suggesting the State Department may have overlooked troubling connections in its eagerness to counter China. Diplomats must now defend their support while addressing serious national security concerns raised by Congress. The dilemma: promote American business abroad or guard against foreign influence? In Ivanhoe Atlantic's case, these goals seem to clash. The State Department faces mounting pressure to clarify its position and prove its efforts aren't entangled with the CCP. The outcome will shape future US commercial diplomacy. The stakes: credibility, security, and America's role in Africa's resource race. The world is watching how Washington responds. Ivanhoe Atlantic has responded forcefully, insisting it is legally and operationally separate from Ivanhoe Mines. CEO Bronwyn Barnes has positioned the company as a direct counter to Chinese influence in Africa, pledging that all iron ore from its Guinean site will go exclusively to the US and its allies, none to China. This bold promise is meant to reassure Washington of the company's loyalty. Ivanhoe Atlantic also highlights its plan to build its own export corridor, refusing to use the Chinese-backed Trans-Guinean Railway. The company argues it's investing billions to create a truly independent route to market. This defense is a calculated effort to rebrand Ivanhoe Atlantic as a patriotic asset for the US. The company's future now hinges on whether Washington believes its assurances. The battle for trust is as fierce as the fight for resources. The real prize in this controversy is Simandou, Guinea's mountain range holding the world's largest untapped reserve of high-grade iron ore. Its purity makes it highly valuable for steel makers and for reducing carbon emissions. China already controls half the mining blocks and is building the massive Trans-Guinean Railway to secure long-term access. Ivanhoe Atlantic's project is a direct challenge, aiming to create a separate, Western-aligned export corridor through Liberia. This would break China's potential monopoly and give the US and its allies a secure supply of critical minerals. The stakes are enormous. Control over Simandou could shape global industry for decades. If Moolenaar's concerns are valid, US support for Ivanhoe Atlantic could backfire, strengthening China's hand. But if the company's defense holds, failing to support it could hand the region's mineral wealth to Beijing. Washington is walking a geopolitical tightrope. The outcome will influence the global balance of power in resources. The world is watching who will win the battle for African iron. The Ivanhoe Atlantic saga is more than a political spat. It's a window into America's struggle to secure critical minerals in a world where supply chains are fragile and rivals like China dominate. The US is racing to reduce its reliance on Chinese-controlled resources, launching a whole-of-government push to diversify supply chains and friend-shore key materials. Ivanhoe Atlantic's project fits this strategy, if its independence can be trusted, but the risk of hidden foreign influence threatens to undermine the entire effort. The case highlights how deeply Chinese capital is embedded in global business, complicating America's quest for resource security. Ivanhoe Atlantic is now a test case for US policy: how to vet partners, balance urgency with caution, and set a precedent for future resource deals. Representative Moolenaar vows to ensure US commercial diplomacy is free from CCP entanglements. How Washington resolves this will send a powerful signal to the world. The stakes: America's industrial future and the global rules of resource competition. the outcome will echo far beyond Guinea's mountains.